Hey, what's up, my friend? Welcome back to today's training video. You're going to be learning all about trading pullbacks, right? You'll learn what are the pros and cons of trading pullbacks. You even know where is the likely place on the chart where the market will pull back into. And finally, you'll learn 3 different entry techniques that you can use to enter on a pullback. So are you ready? Then let's begin. So, what is a pullback? A pullback looks something like this, right? If you have an uptrend, then the move that is against the underlying trend, like this over here, and this over here, are known as pullbacks in the market, right? So basically, if you're talking about trading pullbacks, you're basically entering the trade as the market has traded at a lower price in an uptrend. So the pros and cons of pullback is this, right? The pros is that you're basically buying low and selling high, right? If you're trading pullback in an uptrend, you're basically buying low. And if you're selling pullback in a downtrend, you're basically selling high. And the second thing about this is that it is actually easier on your psychology when you're trading pullback. And the reason being is that you're basically trading from an area of value, right? Because buying low and selling high is something that we all are very accustomed to, right? Because when we are going to the supermarket or we buy our stuff, we always want to buy low and sell high. So pullback basically represents the opportunity to buy low and sell high. And the downside of it is that you may miss the move, right? Let me explain why. For example, in an uptrend, it consists of higher highs and higher lows, right? So, okay, not too good. Let me redo this once more, right? In an uptrend, you have a higher highs and higher lows. So let's say price is pulling back right now. And let's assume you are hoping that price could, perhaps retest back these lows over here. So you're looking to go long at these lows over here. But what happened in the market is that price doesn't pull back deep enough, and then it went and trade higher without you. So end up causing you to miss the move. So this is the biggest downside in trading pullback, is that sometimes you may actually miss the move while waiting for price to come to your desired level. Now, once you've embraced, right, about the pros and cons of trading pullbacks, the next question you probably have is, hey Rayner, where will the pullback end? Okay, so I want to share with you 3 scenarios where I find that the pullback would usually end in either one of these 3 particular scenarios. Number 1, it tends to respect support or resistance, right? Support in an uptrend and resistance in a downtrend. Number 2, it tends to respect a moving average. And number 3, a trend line. Let me explain. Right, so you can see that this chart over here, doesn't matter what time frame or what market this is, right? These are pretty much universal rules, universal principles that you can apply. Okay, so you look at this chart, this is an area of resistance, right? Price broke out of it and then it pulled back. Where did it pull back into? Previous resistance, now turn support, right? Then price rallied higher once more and then it pulled back once again. Where did it pull back into? Previous support, right? Then it trades higher, right, breaking out above this highs over here. And then it pulls back, right? It pulls back, and where did it pull back into? It pulled back into previous resistance, now turn support, right? And then it trades higher once again, right? So this is an example, right, of price pulling back into an area of support in an uptrend. And this is just vice versa for downtrend. The next thing that the market could potentially pull back into is back towards the moving average, right? In this example, the red line here is the 20 period moving average. The blue line is the 50, right? So it tends to pull back into the 20 and 50 period moving average, right? So again, right, this is just a very cherry pick example, right? I'll admit, right? Because there are times where the market will respect the 100 period moving average or the 200. So this is something that you probably have to be more proactive and to notice, right? That in this market condition, which moving average is more applicable or whether it's even applicable or not. So moving on, another thing that a market would respect is a trend line. So you can see over here, price, trades higher, comes lower, trades higher, retests back this trend line. So at this point, you have 2 touches, right? One touch, 2 touch. So the third touch is something that you could actually pay attention to. Then it trades higher, come back, but just not close enough, right? So recall earlier, the cons of trading pullback is that sometimes the market may trade without you, right? So this is one example. If you were to be waiting for price to come towards this area of trend line, you have missed this move higher. and then it come back lower, retest the trend line, trades higher, then it trades lower and start to hug the trend line all the way here, and then it breaks out higher once again. So this is it, right? These are the three particular scenarios where the market tends to pull back into. And now comes the important question, which is how do you trade pullback, right? So there are, of course, many different ways to trade pullback, but I just want to share with you three very practical ways that you can consider trading pullbacks, right? Because I find that this three approach is very sound and logical to me. Number one, candlestick pattern, right? You can look for reversal candlestick pattern like the pin bar, the engulfing pattern, right? As sort of a confirmation, right? To share with you, to tell you that the market is about to continue into the direction of its trend. Number two, you can look for a break of a trend line before you enter the trade. And number three, you can wait for a break of structure on the lower time frame. Let me explain. For example, take this chart as a reference, right? The first way you can look to trade it is, recall we talk about candlestick pattern. So if price has pulled back to an area of value, an area where you think the market will reverse from, so you can start to look for reversal candlestick pattern before you enter a trade, right? For example, you have this bearish engulfing pattern over here, and before price traded lower, this is another, well, it's not really a very bearish candle, but nonetheless it engulfs the body of the previous candle, right? Then you have another one over here, another bearish engulfing, right? A bearish pin bar here, and another bearish engulfing candle over here. So mind you, this is obviously a cherry pick chart, right? I cherry pick this chart not to show you that this method is the best, but rather is to illustrate my point. Because if you have a well-picked chart, it is much easier to illustrate the point I'm trying to put across. But I hope you understand that trading is definitely, there's no such thing as a 100% win rate, right? There will be winners and losers no matter what your trading strategy is, right? No matter what your trading strategy is, right? So don't get misled about, this current chart that I'm showing you right now, right? The reason why it seems to work really well is because we are in a clear downtrend, right? When you have a very clear downtrend, you realize that no matter what entries you use, right, chances are is that it's going to, make you money as well. So if you don't believe me, right, this was the candlestick entry that you can consider. Or how about the trend line, right? You look for a break of trend line, we can draw a trend line. Right, when price break the trend line, you go short. Again, it works. Right, another one over here, you can draw this trend line. It breaks, you go short. Again, it works. And this one over here, and this one over here. So I hope you get my point, right? Is that I'm just trying to illustrate to you the different ways that you can consider entering on a pullback, but don't be misled about thinking that this is such a very a high win rate strategy, right? It's definitely not the truth, and it's something that you have to be prepared for, right? You have to be prepared for losses, right? No matter what approach you use. Okay, so for this, the trend line example, right? How you go about trading it is when price break and close below the trend line, you can look to go short this market, right? The break and close below the trend line, look to go short, and again, right, it's all pretty much the same. But for this over here, right, you look at this strong bearish close, you probably go short at a very low level. This is a trade that you possibly want to consider skipping altogether. Okay, so the last thing I want to share with you is what you call the break of structure on the lower time frame. So let me explain this. So let's say, for example, price has come into this area of value, right? Say somewhere over here. So what you can do is that this is the 4-hour time frame. You can go down to a lower time frame like the 1-hour time frame and wait for a break of structure to signal to you that the trend is about to go back into its original direction. So let me show you. So you go down to the 1-hour time frame, and this is the same portion we saw earlier. On the higher time frame, the 4-hour, you saw that the consolidation is this one over here actually. So how you go about doing it is that you start to observe the structure of this market, right? You notice that the retracement consists of higher highs and higher lows, right? You have higher lows, higher lows, higher lows, higher high, higher high. All right, then at this point things starts to change, based on the structure of the market, right? Notice that you have a lower high and a lower low. So once you have a lower low and a lower high, it's telling you that possibly that this market, that this retracement is coming near towards its end. And you can look to go short this market when price breaks below this low over here, right? So this is what I mean by a break of structure on the lower time frame. So these are basically the three different methods that you can use to enter on a pullback. So now the next question is, Rayner, what about stop losses, right? How do you actually, manage your stop losses, right? So the most logical area to set your stop loss is number one, above the swing high, right? Since this is a downtrend, right? Above the swing high would be a logical approach. If you want to be more conservative, right, you can actually use the previous swing high as well. So instead of putting your stop loss above this high, you can use this high instead. So this is something that is, I would say, it's personal. It really depends on your own personality and your attitude towards risk itself, right? So with that, right, I pretty much just want to give you a heads up into the things to look out for when you're trading pullback, and what are the options that you have as well, right, when you're trading pullback. So just a recap to what you have learned in today's video. Number one is that you learn what is a pullback and the pros and cons of trading pullback, right? The pros is that, pullback basically allows you to trade from an area of value. So this allows you to, buy low and sell high. And because of the fact that you can buy low and sell high, I believe that it is easier on you psychologically to execute pullback trades. Because, we are humans, right? We always want to buy something cheap, something low, and we want to sell as high as possible. So from a psychological standpoint, right, pullback trading is easier to execute. And the downside that I talk about is that pullback trading sometimes will lead you to miss moves in the market, right? Because sometimes the market just doesn't pull back to your desired level and it will just take off without you, right? I think this is worth repeating, right? Say, for example, this is an uptrend and the market pulls back. Let's say this is an area where you expect the price to pull back into before you get long. But what happens? The market just takes off without you and you miss the move, right? It doesn't matter what time frame you're trading or what markets you're trading. You are definitely going to experience this at one point or another. And then we talk about where will the pullback potentially end, right? I share with you 3 instances where the pullback usually end, either at support or resistance, right? Support in an uptrend, resistance in a downtrend, or back towards a moving average, or back towards a trend line, right? These are the 3 common scenarios where the market tends to pull back into. And last but not least, we talk about how you can trade pullback, right? I mentioned that I give you 3 different entry techniques you can use to trade it. Number 1, right, candlestick patterns, right, like the reversal patterns that you have in candlesticks. The pin bar and engulfing patterns are patterns that you could look out for. Number 2, we talk about the break of trend line, right? You wait for the market to break the trend line before you enter your position. And number 3, we talk about the break of the structure on the lower time frame, right? You wait for a break of structure on the lower time frame. I don't want to write the word structure here, but there is, right? Break of structure on the lower time frame. So I think this is worth mentioning once more. So basically, if you have a pullback in a downtrend that looks like this retracement over here, right? Say for example, this is the 4-hour time frame. The 1-hour time frame will look something like this, right? The retracement will have a higher lows, and higher highs. So you wait for a lower high and a lower low, right, before you go and short the market once more, right? So this is basically what I meant by the break of structure on the lower time frame. And then we talk about where you could put your stop loss. You could either put your stop loss above the current swing high or at the previous swing high, right? So this is basically how you can actually go about trading pullback. It's not an exact trading strategy for you to use, but it's to give you all the different possibilities, right? The important stuff that you need to consider before you want to trade pullback. So I hope this really gives you a good insight into how you can actually trade pullback in your trading career. So with that, right, I've come to the end of today's video. If you've enjoyed it, feel free to hit the subscribe button below so you always stay updated, right? And lastly, if you have any questions or feedback, feel free to let me know in the comment section below. Right, with that, I wish you good luck and good trading. Talk to you soon.